Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel today, wherever you are tuning in from around the world. Thanks for watching. Today, we're going to talk about, has the bull market been saved? And what is coming next, what to look for. We're going to look at a bunch of news, some charts. You aren't going to want to miss what's coming next. But before we do that, smash the like button. This does help get this channel out to more people and does, of course, help support the channel, as does your wonderful comments that you leave. Thank you so much for doing that. And, of course, those who put questions in the comment section, well, I'll get back to those as soon as I'm able to. However, if you'd like more immediate engagement or interaction, you can find me in the Discords. Now, unfortunately, the Tribal Trades Discord is closed at the moment, but in the description of this video, you might need to click the More button. It will pop out. There's an email address you can email to get on the wait list for that for when we do reopen, or there does become a spot made available. And of course, I'm in the Stocks with Josh Discord. Those links are also in the description below as well. I have my own Crown Traders channel in there where I share education, insights, resources, some of my trade setups, and of course, entertainment, because I'm not a financial advisor. This is not financial advice. This is for education and entertainment purposes only. Are you not entertained? Okay. And how can you not be entertained by what happened yesterday? This is pure theater entertainment playing out before us, right before our eyes. So let's look at what was the news and what happened. And of course, it was the crypto reserve. Where they announced XRP, Solana, and Cardano, and everybody was flipping out going, what on earth is happening there? And then, of course, just an hour later, obviously it includes Bitcoin and Ethereum and some other valuable cryptocurrencies. Check my show from earlier today where I talk about what I think those cryptocurrencies could possibly be and what could possibly be added, and some levels there for entries. Okay, so that was some of the things that happened, of course, which kind of made things a little bit crazy. We also managed to fill the two CME gaps all in 1 week, to the downside at 78K and to the upside at around 94K. But now we've created another one, quite a big one, between 84 and 94K, and we've already partially filled it. Coming back, I believe we came back, tested 91, maybe 90,000 there. Very interesting. Not everybody is happy, though, here. The US will use taxpayer money on these altcoins. Why would one build a strategic reserve as something you can just print? Bad look. Bitcoin and stablecoins are the only actual assets with strategic significance. Do you agree with that? I want to know. Vote for me in the comments. Do you think it should have been Bitcoin only? Or do you think it should be what's actually happened with Bitcoin and the four other assets in Cardano, Solana, XRP, and Ethereum? Of course, not everybody's happy either that somebody seemed to have insider information and opened up giant longs, the same person on both Bitcoin and Ethereum with a 50x leverage. He definitely knew something, said Vivek there as well. And then David Sachs, the AI, the crypto czar, said that there is more to come, more to come at the summit. He adds that's coming up on March the 7th. What could happen before then? Obviously, some news got leaked early on Sunday. Will there be continuous leaks during the week? Stay tuned for that. And that's why I did the video earlier today about the altcoins that could possibly be next or be announced on March 7th. And what will happen after March 7th, what will take place. That is something we just don't want it to be a buy the rumor and sell the news event. We're going to look at the charts in a moment, some key levels we need to break and to hold there as well. So as you can see, even Peter Schiff wasn't too excited. He actually came out saying, hey, I get the rationale for a Bitcoin reserve, but what's the rationale for an XRP reserve? Why the hell would we need that? And then, of course, China looks to be entering in with closed door meetings on a strategic Bitcoin reserve. It's happening. Don't see any official reports yet on that, but certainly that could be something's happening. I like the Wolf of Wall Street. You could have skipped this entire week, woken up, checked Bitcoin price, and it would be the same. 94K last Sunday, 94,000 today, and that was yesterday of course, on that. So, okay, so we're going to jump over to the charts here. And as we can see, so I did a couple, just to give you a summarize from the last week, I said that if we lost the 20 EMA, we lost, which we did, and we lose these key levels of support here between 88 and 90,000. Losing one, yeah, not too bad, but we would be losing the range. Remember, this range here at 90,800 was established back in November of 2024. And I said clearly in a video, if we lost that, then it would be likely we came down to the 200 EMA on the daily and the 200-day moving average, and both of those got hit just as I predicted they would if we lost that level. That was our line in the sand. Then I created a new line in the sand for the bull market support band. And I called it the bull market support band because in previous bull run there, when we lose the 50-week move average, which is this one here, which is sitting currently at 75,500. When we closed below that, that would signal the end of the bull run and into the bear market. So that's our line in the sand to the downside. So we had a line in the sand that if we lost that level, we would come down and retest these. This is what we did. I did say we were going to come down. I felt I was surprised if we didn't come down and retest the 50 EMA on the weekly time frame, which we did in the April-May 2021 dump. And I feel that this, I've shared numerous times that I felt that this dump was a lot like this, and it looks like that could turn out to be fairly accurate. Of course, if we were to lose this, then it's going to not look like that. It's going to look like November 2021, and I would update and say, hey, we've lost this key level, and now we're in the bear market, in my opinion, based on historical data anyway. It's still a chance that we come down and test this 50 EMA on the weekly. Even in the April and May 2020, we closed a couple of candles below it, but we did not come down and lose the 50-week moving average until it was around December or January, I think, after the November 2021 capitulation. Okay, so that's to the downside. That's what we're looking for. So again, now we're back in, it's Groundhog Day, needing to hold these levels here again at this 90, 89, and 88 level. Specifically, we really need to hold this 20 EMA on the weekly time frame. Look, we haven't even had a close below that, let alone a close below the 200 EMA or the 200-day moving average. Now, this wick is incredibly bullish, but what we've learned as you've been watching this channel over the last 6 or 7 months is a lot of the times these wicks do get eaten up, either the whole wick or a partial wick. So if we did lose, we could come down, maybe come down this 88, maybe come down this 85. Look, we could eat this whole thing up and still be in a bull run and still get another opportunity to buy the dip. It really depends what happens this next week. This next week is very crucial to see whether or not this is just more talk, what action is going to be taken, what else is going to be added, and how people feel about that. Now, to the upside, now, of course, we're back in the range, the 90 to the 100K range. They're back in that range now. And like I said, we've been in this range for quite some time. I did say we had 2 deviations outside the range. Now we've had 1 deviation, but no closes. We had 1, 2, 3 weekly closes, 3 weekly closes there or roundabout. So there were some times that we spent outside of the range. Could we see some closes, some weekly closes below the 20 EMA on the weekly, or even some weekly closes below the 200 EMA on the daily, or even down here under the 200-day moving average? That would not mean that the bull market is over. And of course, the tribal trades trend line kind of held up things there. One line to rule them all. That was the support. Look at this, came down and hit it and tagged it perfectly and didn't even come down to the 50 EMA on the weekly. But there is still, look, we are still in a downtrend technically on the weekly. Even if we click to the daily, we haven't been able to make a higher high. We do need to get above. So what are the lines in the sand to the upside to make a new all-time high? We must break above this 100K area. We must make a new all-time, a higher high, not all-time high on the daily, a higher high on the daily chart, on the daily time frame. We've got to get above this. So the 50-day moving average is round about there at this double Fibonacci at around 97,900. But this is the line we must get across. If we come up here and get rejected again, then that could mean a continuation to the downside. And obviously, we just didn't even get up there at all. So that is absolutely crucial to get above 100K. That's my target to get to the upside. My target to hold to the downside, obviously, is that 90K area there. And of course, obviously, then there are some more crucial supports. These generally in a bull market have historically been amazing times to pick up Bitcoin. And what have I said on the 200 EM on the daily? Usually in a bull market, it doesn't go far from it and it doesn't go below it for long. And the 200-day moving average, even a better opportunity if you manage to pick up some Bitcoin there, as I did. And I even managed to get some down here at around 78,000. Now let's look at the liquidation heat map, because we're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And as you can see here, massive amount, billions and billions of dollars of liquidation to the downside. Now look, at some point liquidity is going to get left behind. Could we come down and tag the 75, 76, 70 area? Yes, but it might also now be left behind and can be, they can get that later in the bear market, okay? It's not going to be left behind forever. They can come back and get it at a later time. But if we, you know, obviously up to there is 6 billion. So there is billions up here at 100,000, 5 billion, 4 billion, 1 billion, 3 billion, 2 billion, 1 billion. Add all that up, that's probably over 10 billion there if the market makers bring it up to 100K. So I do think that is going to be tagged. I just don't think they leave that behind, and I think that's going to be tagged. And so that would mean some good upside for altcoins as well. So I feel, can you ever say that word in crypto? I'm not even going to say it, but I feel fairly confident that we're going to go up and tag this level here before we see a bear market, or if we do go into a bear market from there. Obviously, there is a lot to the downside as well, but now there is a huge amount to the upside, and the shorts are going to be paying. We could see a short sweep that could propel it all the way through these levels: 1.85 billion, 2.47 billion, 2.42, and then up to 108,000, 3 billion, all the way up to 109,000, 5 billion. So again, I feel fairly confident that we're going to go up and make a new all-time high and at least get to that 110,000 level, maybe higher there. But we'll see what happens and what shakes out in this market. If we go to the shorter time frames, again, there is more to the upside. So I feel there is more incentive for the market makers to move it. It doesn't mean they can't come down and get that last bit of liquidity around that 76, 77, 75 and scare the pants off everybody. But I would say that, and you can see it here, even at these levels down 84, 82, there's still a lot of liquidity that they could come and grab to the downside. In fact, they could fill this CME gap here between down to 84, and there'd be a lot, 82 million there, 34 million, 71 million. There's quite a bit of liquidity that they can come and grab and fill that CME gap there as well. So this will be interesting to see how this shakes out. You can see again on the 1 month time frame, a lot of liquidity to the upside, 100,000 there, 110K. Let me know what your thoughts are. What would you do if you're the market maker in this situation? I know what I would do if I was the market maker. I would probably look to just send the market higher and leave that stuff for later. They already came down and flushed down. And I think people, and this is what happened, people had their buy orders down there potentially at these levels at the 50 EMA on the weekly at, down at even 73. This is the bull market line in the sand here, and they know that this is the crucial level that you can't lose to remain in a bull run. And so I do think, although we could come down here again, I think we have a good enough catalyst to move to the upside here and continue on. But we do need to hold this again. That's 90,000 level. This absolutely has to be a level. Now we have a deviation outside of the range here, just like we have a deviation over here outside of the 100,000 range, and a deviation. Oh, we didn't want to move that. And a deviation over here as well outside of the range. Now we have a deviation down to the downside outside the range. That could mean that we have another deviation here, maybe a smaller one, before we move up. Or maybe this week and this March 7th will be a big enough catalyst to send us to the moon. So I do feel fairly confident that we are still in a bull run, of course, and I've given you those key levels. Would love to know your thoughts in the comments. And until the next episode, or until I see you in the Discord, Happy trading.